You spot a high probability breakout on the euro to dollar pair. The technicals align perfectly, you hit execute, and then your local bank deposit is declined. It is perfectly legal to trade Forex in Morocco, but there is a massive difference between having the right to open a position and having the unrestricted freedom to send your money to an international broker. Every dirham that leaves the country is monitored. To trade successfully without having your bank account frozen, you have to operate within a very specific, dual-layered legal framework. First, you answer to the Office d'Échange. They manage Morocco's foreign exchange reserves. Their priority is the stability of the Moroccan dirham. Because the country has capital controls, they govern the physical flow of your funds, strictly limiting how much you can send abroad. Second, there is the Autorité Marocaine du Marché des Capitaux, or AMMC. They act as the financial police inside Moroccan borders. They vet entities offering financial services to ensure retail investors are protected from fraud. They care exactly who is handling your money. You can be a master at decoding institutional price action, but if your deposit violates these capital flow restrictions, your technical edge is useless. Here in Morocco, the modern financial landscape is expanding, but it remains tightly gated. For most retail traders, the only legal way to reach international markets is through the Datation Commerce Électronique, the annual e-commerce allowance. The standard limit is 15,000 dirhams per person. Let's look at the math. Say you want to fund an account with roughly $1,500. By making that single deposit today, you have instantly exhausted your entire legal allowance for the year. Cautionary: any attempt to send more money using your Moroccan card hits a hard stop. Your bank's internal compliance filters will automatically block the transaction. This tight bottleneck pushes some traders toward peer-to-peer transfers or black market currency dealers. These are incredibly high-risk workarounds. Local banks use sophisticated algorithms to flag suspicious patterns. Trying to bypass the limits through unofficial channels frequently triggers Article 18 audits, forcing you to legally justify the source and destination of every single cent. The only viable path is total transparency. Speak directly with your bank advisor to activate your international card for e-commerce, and plan your trades around that legal ceiling. The AMMC heavily scrutinizes contracts for difference, the primary vehicle for Forex trading due to their high leverage. Because many international brokers cannot legally solicit clients on Moroccan soil, the entire burden of due diligence falls on you. You will see offshore brokers offering massive 1 to 2,000 leverage with zero background checks. These entities offer no legal recourse if your funds disappear. Safe trading requires platforms overseen by Tier 1 regulatory bodies like the FCA, ASIC, or SISEC, which legally force brokers to keep your capital in segregated accounts. Morocco recently made major strides to exit the Financial Action Task Force gray list. However, that legacy means Tier 1 international brokers are required to apply enhanced due diligence to all Moroccan residents. To pass these checks, you need a flawless compliance folder. This includes a recent utility bill for proof of residence, an attestation des revenus, like a tax return, and a heavily documented source of funds proving your deposit came from legitimate savings. Strict anti-money laundering protocols exist for a reason. Providing precise documentation up front is the only way to guarantee your account won't be frozen exactly when you try to withdraw your profits. Once you start withdrawing significant amounts, you leave the realm of casual retail trading. Under the Code Général des Impôts, Moroccan residents are required to declare global income, including Forex capital gains. But before the tax authorities take their share, there is a silent killer eating your margins: double conversion fees. Your bank charges you to convert dirhams to dollars on the way out, and the broker takes another cut on the way back in. To protect capital, seek brokers offering the dirham as base currency or highly competitive conversion spreads. When taking profits, avoid pulling out small amounts. Banks levy heavy flat fees for international wires. Planning fewer, larger withdrawals minimizes banking friction. Long-term profitability requires treating your administrative and tax planning with the exact same discipline you apply to managing your trades. Operating from Morocco does not isolate you from the global markets. It simply demands a higher standard of execution. Respecting the boundaries set by the AMMC and the Office d'Échange pulls you out of the vulnerable gray market. It turns you into a resilient, professional international investor. Look closely at your current setup. Is your broker properly regulated? Do your deposit methods align with your bank's legal limits? For serious traders focused on compliance, FXNX serves as the premier gateway to institutional-grade trading. Built for institutional demands, FXNX offers Tier 1 regulation, spreads from 0 pips, and a secure operational framework integrating smoothly with local constraints. Stop fighting the regulatory friction, step out of the gray area, secure your capital, and start trading with FXNX today.